Errol Barnett.
And I'm Lana Zach. We are just moments away from finding out how much the Federal Reserve will raise interest rates.
That's right. The expectation is 75 basis points. This action would mark the fifth rate increase this year. The aggressive move is part of the Fed's strategy to fight inflation. This action would come roughly 1 week after the Labor Department released the latest Consumer Price Index report, you may remember. That showed prices in the U.S. remained near a 4-decade high last month.
Joining us now is Akiko Fujita. She is an anchor and reporter for Yahoo Finance. Also joining us is CBS News correspondent Christina Ruffini. It's good to be with you both as we're trying to talk about the issue that's most important in many ways to Americans. So, Akiko, if experts are correct, and this is actually 75 basis points, which is what we expect, this is going to be the third consecutive rate increase at this level from the Feds. How will this actually affect inflation? Because as you and I were talking, there are actually several contributing factors to inflation right now.
Yeah, I mean, we can call these supersized rates. When you think about 75 basis points 3 times in a row, we haven't seen that from the Fed since they started targeting interest rates in the 1980s as their main key in their monetary policy tool. And the reality is that inflation has moderated, but we're still talking at more than 8% if we're talking about CPI, which is what you just alluded to. There's the core PCE number, which is what the Fed likes to use as the main gauge of inflation. That's just under 5% right now. You strip out energy and food prices, which tend to be still volatile.
Right.
We're still at very elevated levels. Now, the thing to keep in mind when you're thinking about what do all these rates mean?
Yeah.
Well, the Fed's mandate is twofold. One is maximum employment and also price stability. Price stability is the inflation part. The Fed wants it anchored at 2%. That tells you how far they have to go when we're talking about 8%.
Yeah, and then the other part of that is also so concerning, which is the job market and making sure that we're not affecting jobs as the Fed continues to increase interest rates.
Oh, well, that's exactly right. And Fed Chair Jay Powell has made it pretty clear there will be some pain. He has used that word pain to brace Americans for what's to come. And the reality is that the job market has still relatively been strong. Yes, it started to moderate, but when you have job levels added more than 300,000.
And Akiko, I'm just going to pause you for a second because we have just gotten the information.
That's right. It is now official. The Fed has decided to raise interest rates by 75 basis points as expected. Akiko speaking about how the mandate for the Fed isn't just to get inflation under control, but it's also to get to maximum employment. We have our Christina Ruffini outside the UN General Assembly, where world leaders are gathering. President Biden spoke this morning. Chris, what is the White House's messaging as it relates to this increase in interest rates?
Well, you know, every time we talk about this, I say it over and over again. It's the economy's stupid. And that is, you know, that's what's on the mind of Democrats. That's what's on the mind of Republicans, especially heading into these midterm elections. President Biden gave an interview to 60 Minutes, and he said, you know, we hope we can have what they say a soft landing, transition to a place where we don't lose the gains that they've made in the economy. But as we were saying, it's not like driving, right? It's not like you're taking your foot off the gas and slamming it on the brakes and you can arrive at that start line. It's not as exact as that. It's more like they're playing shuffleboard, right? And that thing is like sliding along the ice and they're trying to use the brushes to slow it down without stopping it completely and try to get it into the target. It's not an exact science. So the administration has said over and over again, look, the Fed is an independent agency. We don't control them. They're making their own decisions. But it's all interrelated, and it's going to continue to be interrelated into the messaging that they're going into the midterms with.
And Christina, speak more about that, though, because the White House wants Democrats to go into these midterm elections as strong as possible. Meanwhile, you know, gas prices have stopped their decline. Everything is more expensive for everyone. How might that impact the White House's messaging on this topic?
Well, look, the White House continues to argue that the economy is strong, that we're not in a recession. They say there are other factors. There's a strong labor market. There's other indicators that this is not what we would think of as a traditional economic hardship. But again, it goes down to what voters are feeling. And if every time you go to the store, every time you drive your car, every time you do anything, it's going to cost more money, that's an uphill battle for messaging for the incumbent party. Now, Republicans have tried to capitalize on that. But in light of some of these other social issues, including supporting abortion rights and other things. There's some indications that that message may not be landing as hard as it was before, and we're seeing some surge in Democratic registration, especially among women in some of the states. So it's going to be interesting to see if Republicans need to expand on their messaging more than, inflation, 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 if that will get them there, or if when it comes back down to it in another month or so, when voters go to the poll, if that's what's really on the top of their minds, despite all these other issues that are in the news so often.
And Akiko, what does this mean for the average price for Americans of purchasing a home, getting a loan, those types of things?
It's just all going to get a lot more expensive. You pointed to it right there. The loans are going to go higher. We've seen mortgage rates exceed more than 6%. Credit card bills are going to be going up as well. When you talk about the Fed funds rate, which is this additional 75 basis points, all of that lifts everything else higher. So things are going to get a lot more expensive, bottom line.
Yeah. So Akiko, when we're talking about this, very often we talk about if you're a new home buyer, if you're trying to get a loan, but when we're talking about inflation, often we talk about people who are struggling to make ends meet. This also affects people who are struggling to make ends meet because oftentimes they carry higher credit card debt, and those rates are all going to increase. Given that this is the fifth rate hike this year, how are those people being affected, and when might we see this trend abate?
Yeah, so I'll take the latter question first, and it goes back to that 2% inflation target. We're looking at right now the expectation among many economists that we'll eventually get to 4% by the end of the year. With today's rate hike, we're at 3 to 3.25%. That's kind of the range. So we've got a little more to go. Now, ultimately, when does it all end? It comes back down to that 2% target we said. Is the Fed going to ultimately continue to hike rates until we get to 2%? Or are we going to start to feel some of that pain as a result of it? Is the economy going to slow down? Are we going to see the job market, the unemployment rate tick up? And is that going to be enough for the Fed to say, we're going to take our foot off the pedal? In terms of what it means for average Americans, well, it's going to be a lot more expensive. For credit card bills, you said a lot of Americans probably already see it, right? The APR rate has gone up higher. I mean, the best advice here is to obviously pay down as much as you can, but it is going to be a little more painful until inflation starts to tick down to what the Fed wants to see.
I guess the only other flip side of that is savings rates are also up for some accounts. So maybe there's a sliver of a silver lining. Christina, let's connect back with you outside the UN where the General Assembly is taking place. President Biden addressed that body earlier today. Share some of the highlights.
I mean, he addressed a bunch of different topics from climate change to human rights, but when it comes right down to it, the point of the speech was Russia, Russia, Russia. The takeaway, the quote that stuck out the most to me was he said, if nations can pursue their territorial claims without consequence, then we put at risk everything this body stands for. And it was almost a call to action and almost a call to relevancy of the United Nations, because you have all these countries who say they oppose Russia's action in Ukraine, but so far have been really unable to make a difference and to stop Russia's action. You know, they sign a lot of agreements, they make a lot of proposals, but at the end of the day, it hasn't stopped it. So the big question here this week is the relevancy of this body that was started in an effort to stop these kinds of wars in Europe, you know, League of Nations following World War I, World War II. And it's a debate as to whether or not they can make this an effective body. They can use the mechanisms within this building here to stop the war in Ukraine, to help human rights, to work together on climate change. And that's a big if. And I'm afraid we're going to have to leave because we're doing a security sweep here. But we'll be back with you guys later this afternoon.
Yes,
Appreciate
thank you
that,
so
Christina.
much.
Hey, it's a lot of important folks there, not just Christina Ruffini, so we've got to make sure she gets out the way for the security as well. Akiko, on that point that Christina just made, there are aspects of the world and the economy that the Federal Reserve the White House has no control over.
Right.
The war in Ukraine, energy prices, the supply chain, China. Speak to us about all of that is impacting what we pay as well.
Yeah, when you want to think about where inflation is right now, this is at a time when we have seen energy prices pull back, right? And yet today we've gotten that headline out of Russia that says that Vladimir Putin is mobilizing military reservists. That's raised big question marks about whether, in fact, he's going to weaponize energy, oil, and natural gas even more for Europe. We've heard already predictions of potentially utility bills going up here as well. So that's the Russia-Ukraine part. I would argue the biggest question mark is what's happening in China, because when you think about how inflation has gone up, a lot of that has spilled over from the closures that we've seen in China through the zero COVID policy. That's still a big unknown. Xi Jinping has made it pretty clear he's not going to abandon that policy as well. So if we see another uptick and there's more closures, what does that mean for manufacturing over there? Is that going to constrain supply? And are we going to start to see a repeat of what we have seen over the last few years? That's going to be a difficult challenge for Jay Powell because that's just something he can't control.
Wow, so much playing into all of this. Akiko Fujita, thank you so much for coming in. Great to see you as well.